SBI is one stock which is going to be in focus in trade today. The country's largest lender has raised fixed deposit rates and select maturities by up to 1%. Let's chat with the management a little more and understand this move better. Diwakar Gupta, MD and CFO at SBI, joins in on the phone line. Mr. Gupta, morning. Pleasure having you on the show. First, how have you perceived the government borrowing program for H1 FY13, and what do you think is going to be the impact of high yields on SBI's investment book?
Well, I think the borrowing program of the government has been pegged as a fiscal deficit of 5.1% has been targeted. That's much better than the 5.9 that we have this year. And I think therefore it's a manageable program. Yields should come down over the next year. And a reduction in yields obviously is positive for the bank because you have a mark-to-market gain on your investment portfolio.
But Mr. Gupta, the concern has been that yields have been shooting up, at least up until now. Don't know about the future. So wouldn't you have to provide more for the investment book to protect against rising yields?
So we need to see what the level is on 31st of March. But our own assessment is that this is a very short-term kind of volatility. March is generally prone to year-end pressures on, the resourcing of all banks. And I think the same is true for the government. As government spending comes in, as liquidity in the system improves, it should be better.
Mr. Gupta, interesting you say that. Good morning. And you would have more sense of this, but a couple of experts that we have been speaking to have been talking about how the first half borrowing program numbers seem to suggest, at least to their view, that yields are not coming down in a rush. While you saying this is temporary, by when do you expect the yields to start coming off slightly from the levels that they are?
See, again, it's a very hard call to take, and as bankers, we are really much more on the ball as far as deposit taking and resourcing or liabilities of that kind is concerned.
Right.
It will all depend on so many other factors, including the government's rate of borrowing, depending on their own liquidity position. But generally, in our treasury room, in our management discussions, we do not really see a very major spike in yields, which would lead to a mark-to-market liability for us. Now, the year-end could be a few basis points here or there, which is not really a worry. I mean, if these go up in the short term, we'll provide whatever is required on 31st of March.
Okay, why this hike of the 100 basis points in deposit rates, Mr. Gupta? I mean, is the rationale that, or is the thought process that in April the RBI will not undertake any kind of rate cut action?
No, if you notice, the adjustments in the rates have been only for retail deposits, and that too very largely in the short bucket. So 7 days to 180 days has been tweaked slightly, and same for 181 to 364 days. I think this is only to mirror in the very short term the real rates in the industry. So we have depositors and we have a base, and we don't want them to be shortchanged when the competition is paying higher. So it's only an alignment. We have not changed any rate above 1 year. So we don't expect a long-term upward movement in the deposit rate.
Fair point. Mr. Gupta, there have been reports that SBI is likely to reduce rates on SME loans to about 12 to 14% from the earlier 16 to 17. When will that happen, and is it true in the first place?
Well, it is definitely true. We continuously look to opportunities by which we can give our own customers the best rates possible. The CRR cut has made it possible for us to have some additional net interest income. Now, the only reason we are not yet taking a call is that it's no point in doing a flip-flop. You reduce today and you raise tomorrow. So we're just waiting for the first half of April. We are waiting to see how the new year pans out, what the Reserve Bank's policy has in store. And as soon as we think there is some stability in the direction of rates, we will pass on a cut. Chairman has been on record to say that the SME sector is likely to be the first to get relief.
Okay, Mr. Gupta. We would leave it at that. Thanks so much for joining in today and giving us that perspective. That's Mr. Diwakar Gupta, MD of State Bank of India.